A lot of people think you need $500,000 or $1 million sitting in cash to start investing in real estate. That's simply not true. For some qualified investors, the starting point may be much closer than you think. In some cases, just $50,000 in available capital may be enough to help secure a brand new, very large, 5-bedroom, 2-car garage, single family rental property using financing. And that's the first property. It's not the finish line. That is the foundation. It's one of the reasons I like real estate so much. You don't always need to buy the entire asset in cash. You can use leverage to control a larger asset with a much smaller amount of capital out of pocket. Then over time, several wealth building forces can start working together. The property may produce rental income, the tenant may help pay down your loan, the property should build equity over time, and the asset should appreciate. And the financing itself can act like a multiplier when used intelligently. That's how many portfolios begin. Not all at once, not overnight, and not by trying to buy 20 properties right out of the gate. It often starts with one very well selected property, then another, then another. And that's how real estate can start to compound over time. But this is also where many new investors, they get into trouble. Because when they buy the wrong property in the wrong market with the wrong strategy, and eventually the investment starts demanding a lot more of their time and money and stress than they ever expected, that's why the property selection matters so much. At the McCarty Team, we help investors pursue direct ownership of carefully selected real estate. Your name's on the deed, it's your property, it's your equity, and it's your long-term upside. So for many new investors, the right starting point may simply be one carefully selected single-family rental property in a very strong growth-oriented market. A property designed around rental demand, lower maintenance, income potential, long-term appreciation, and future portfolio growth. Then over time, that foundation creates opportunities for much larger moves later on. More rentals, maybe like multifamily properties, commercial properties, or land, or all of the above. But the key is starting correctly, because the wrong property can drain your cash, your time, your energy, and your confidence. However, the right property in the right market with the right strategy behind it can be the foundation for future wealth creation. And that's what we help investors think through: the market, the numbers, the growth path, the financing, the risk, the management strategy, the long-term plan, and the next move after the first move. Because the goal is not to spend years trying to figure out real estate all by yourself. The goal is to own the right asset with the right strategy behind them.